reach your goals using a portfolio manager as your navigator? Do you have the proper tools to manage your portfolio and take better decisions to reach your goals? Is the information on all your assets in one place? What must your portfolio manager have or enable you to do so that it is as useful as a dashboard in an aircraft? What risk do you carry in your portfolio? These are some of the questions that I'll answer in this part of the video. Managing is a strange word, at least in India. When someone is going through a tough situation and you ask, "How are you doing?" chances are that you will get the answer as, "I'm managing." When someone tells you something can't be done, it's commonplace to ask them to somehow manage it. I really don't know what that means. There is a chance that when you hear manage your portfolio, you may not know exactly what you're supposed to do. I have had the opportunity to work as a consultant and trainer with many good market leading companies. And one of the common challenges they face is that their managers, especially sales managers, don't know exactly what is it that they're supposed to do that is different from what they did earlier or their colleagues are currently doing as salespeople. And everyone enjoys a good laugh when the sales manager is called a sales damager. I think there is some truth in this innocuous sounding connection. You have seen the investing process and the system you need to make informed decisions. All the decisions you make come together in your portfolio. Now you need something to help you make informed decisions at the portfolio level. Most portfolio trackers are designed to be used as report cards, showing how well you have done and where you are screwed up. Instead, you need to look at your portfolio like a pilot. Look at the aircraft dashboard, a sophisticated device that helps him navigate and stay on course to reach his destination. Brokers have a record of all the stocks that you have bought and sold, usually under transactions, and what you currently own under portfolio or holding. They show what you own, how much, the average price you paid for it, the current market price, and the gains or loss that you have had on each stock or mutual fund in your portfolio. This is a classic report card portfolio tracker. Some brokers provide you with an analysis of your portfolio, which is helpful, but not enough to help you navigate your way to your goal. What does it mean to make informed decisions at a portfolio level, and how do you navigate your investing to reach your goals? You have seen the fundamentals of how to build a wealth creating portfolio and how to manage it. There are three main reasons when you are required to make decisions. First, stocks are ever changing, so your ongoing work as an investor is to assess what has changed in your portfolio and what actions you need to take to ensure you are on course to meet your goals. Second, once you have a portfolio, any additional investments that you make need to be seen in the light of what you already have. 3. When you need to withdraw money to fund your goals, you need to decide what is the best way to do it. You will need a tool that enables you to do this well. This is best described as managing your portfolio. So, at Money Works For Me, we call it the portfolio manager. Since you need to make decisions across the asset classes and within each asset class, you will need a portfolio manager that can handle different asset classes. In short, you need a multi-asset portfolio manager. You may not find this in your broking account simply because you don't buy all the assets here. However, there are some sites that offer you this. You need to select one that is more navigator oriented rather than a report card. Now, to use it effectively, make informed decisions and manage your portfolio. Here are key things that you should do. 1. Manage multiple assets in one place. The two most important things required to reach your goals are ensuring the asset allocation mix and achieving the desired overall portfolio returns. For this, you will need to maintain your entire portfolio, which includes stocks, mutual funds, debt or fixed income assets, gold or commodities, and real estate if possible in one place. And you should track these in near real time on your portfolio manager. 2. Total portfolio perspective. On the Money Works For Me portfolio manager, snapshot under the total portfolio tab, the one that is open on default, as you can see on the screen, you can see the current value of your investments in different asset classes, the absolute gain or loss in value and percentage, and the CAGR on the total portfolio. This information will help you take the following actions at the overall portfolio level. A. Asset allocation decisions. When adding fresh money to the portfolio or rebalancing it when required to get the mix back to the allocation that your financial planning has dictated. B. The returns earned by the portfolio are indicated as the XIRR. This helps you track whether your portfolio has earned the returns as expected in the financial plan. C. The split of the equity portfolio between direct stocks and mutual fund is also visible. The desired mix depends on the investment strategy that you follow. If you click on the stocks row, you will get to see what is called the see-through portfolio view of the portfolio, where you can see how much of each stock is held directly in the stock portfolio and how much is held indirectly through the different funds that you own. This informs the investor of the total exposure to stocks and allows them to decide accordingly. 3. The direct stock portfolio analysis. Your highest priority is managing your equity portfolio, and it should do that excellently while enabling you to handle the other asset classes well without complicating things. A. In the direct stock portfolio, you need to know how much is invested in each sector. If there is a higher than desirable, which is more than 25% exposure to a particular sector, then you need to reduce it by selling stocks with a low upside potential. B. The decision rating being available here enables better tracking and decision making. Similarly, you need to be able to see details for each asset class. C. Risk analysis. A good portfolio manager must help you manage risk by providing you real-time portfolio analysis. The risks highlighted in this report, as shown in the image on your screen, are 1. Asset allocation related risk. Here, as you see, it is skewed heavily in favor of equity and low on debt and gold asset classes. 2. Stock related risk. These can be handled at a specific stock level and include the following. A. Business risk. Essentially, a red quality stock is a business risk. B. Liquidity risk. When a stock has very low trading volume, it leads to a very high price fluctuation and possibly a lower price when you go to sell it. This is relevant when the volume traded in the stocks are large compared to the daily traded volume. Mutual funds face this problem with small cap funds. C. Valuation risk. When the prices are in the overvalued zone, you are having a valuation risk. 3. Portfolio related risk. These can be handled by making changes at the portfolio level and include the following. A. Market capitalization risk, which tells you if you have more than suitable exposure to small and mid cap stocks, then that needs your attention. B. Stock exposure risk, which happens if you are overexposed, that is more than 25% to any one sector. C. Stock exposure risk, which happens if you are overexposed, that is by more than 10% to any one stock. This level of risk analysis helps you take appropriate action and manage your risk better. While this is all about stock investing, you may have some mutual funds. Number 4, mutual funds portfolio related decisions. Uploading a portfolio on the Money Works For Me portfolio manager enables you to check if a particular fund is substantially different from your current direct stock portfolio or your entire portfolio. This can be checked on the fund decision maker, that is on the funds page. It also enables you to perform the fund portfolio analysis and take better decisions. Number 5, manage transactions. This enables you to add and edit any transaction with ease. The portfolio manager must keep a record of all the transactions and update dividends paid out automatically so that the returns are correctly computed. Most good brokers sites do all this for stocks, but you may not have invested in mutual funds through your broker as they sell only regular plans, barring a few like Zerodha. However, it is becoming possible for you to transfer your holding to your investment advisor portfolio manager with increasing ease. With this, you have come to the end of understanding all the processes required to manage your investing successfully. I hope you have started implementing what you have learned, because your money grows only when you take actions. Happy investing and thank you.